Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. It's Friday. Good morning, everybody. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an excellent trading day yesterday. As we roll into the end of the week, for those of you new to the channel, click that subscribe button down below so that you get the updates and as well as the notification bell as they do come out and become available. We're going to do what we do each and every day, looking at the same 10 to 12 futures markets, identifying educational opportunities from both a breakout perspective as well as a reversal trade perspective. So let's dive right in. So S&P, we're down about 13 points this morning in the ES with a little bit of weakness that has shown up in the overnight sessions. Now, we had a potential to try to enter a short right here, but if you notice, that short has a dashed line, meaning that we wanted to see price come into here and then come back out before we would take the short, because this was not a high probability setup. Why wasn't it a high probability setup? Well, when I look at it on a 15-minute chart, you see that we had bounced off of here once. The second time through, because we'd already hit it once, the second time through is a significantly weaker time. Think about it like this, that what created this move down was unfilled sell orders that were remaining in this area. We came back up and used up some of those unfilled sell orders. Think of it like cookies in a cookie jar, right? We just took a few more of the cookies out of the cookie jar. And then the next time we came back up, there wasn't enough cookies to make us happy. So we were unable to get the reversal for price to come back down. Now, why did we reverse up here? I guess we could theoretically go into a smaller time frame and see if there's a reversal point somewhere in here. Realistically, that was off of the Sunday night open. So there's really not going to be a whole lot in there for me to look at and to lean on from a perspective of getting long. So what does that mean for me today? Well, today I don't really have any great opportunities one way or the other. Now, we did have a potential breakdown below 26.26, which we saw price hit there and rally back up. But one of the things that's important about a breakdown, and this was found on the hourly chart, for those of you that were in the live trading room, there was one specific thing I said needed to occur before I'd be willing to take this breakdown below 26.26, and that was that we needed to see basing in front of the level. You know, anytime that I have some decent basing way back here and then it doesn't base before the second time through, I'm not going to be as bought into the breakout to the short side. I still think that there's room for price to fall. I would just have to lower that level now to less than this candle's wick. It's got to be lower than this candle's wick. And so that's really the important part now, is that it's got to be below this candle's wick, because I don't know how many contracts or how many orders are left at the bottom of this wick. But that's why it's so important to look at the details. I need basing before that level before I take that breakout, or else I'm going to get, you know, kind of stuck with that false breakout if it were. So, you know, we're in an overall downward move. We have had a fairly weak, well, there's no nice way to say it, a weak week. Our week has been very bearish as we, you know, gapped up Sunday and everybody said, "Oh, look, the markets are back. Yay, hip hip hooray, Santa's coming to town." Psych. And that's really what we've seen. It's just been a continuation of this sell-off to the downside. And yesterday, we got a really nice rally up off that low area. I think that, you know, that may have just been a short covering rally. So looking at the NQ, now the NQ did make it to a stronger reversal opportunity yesterday, and it actually obeyed that reversal opportunity very, very well, which was this area right here, right? The origin of a strong move down. We came back into that level, immediately reversed, and we've come back down from there at the moment. Also here, I don't necessarily have a great spot to add to this position or any positions that I'm going to jump into. So I actually kind of feel myself, especially on a very volatile week like this, that I may be more entitled to sit on my hands a little bit this morning. There's no sense in forcing a trade. I'm down about, you know, a little over 0.5% in the Nasdaq this morning. We're down a little less than that in the S&P, 5.6% versus 6.6%. So the Nasdaq is a little bit weaker from a percentage basis right now, but not so much so that it's falling off the map. And so I'm going to let this thing be a little bit, because there's a good chance we could always get a little bit of a rally, only that 0.5% move one way or the other, that I wouldn't want to take a short that I'm kind of forcing it. Because if I took this level up here again, then I'd be forcing it off of this move here. So for now, I sit and wait a little bit. Crude oil. So crude oil, we're coming close to a potential reversal off the 15-minute chart. How do I know it's the 15-minute chart? It's in purple. I use the purple time period to tell me when I found a level on the 15-minute, and that's all these wick over wick areas. Now, understand that in all reality, the better level is this whole area where we go to the top of this wick, and so there is that to consider as well. In gold, so in gold yesterday we were looking at this and we had this area up here 1250 by 1253. We came really close to it and didn't get in. And so now that switches to a confirmation style entry. And that level, if I go back and find where that was created, goes all the way back to here. And let's pull that to a 1 hour just so we can see the 1 hour time period. I got to go back further on my 1 hour. So let me go back 180 days on my 1 hour chart. I didn't quite give myself enough time. That one was way far back. So I'd like to see what that setup is on the hourly. So on the hourly, this is the level that we identified. Now this comes off of the European market open. That's really why that level exists. Now there's also a little pivot above us that could also serve, price could go all the way up into there, which is why we have this as a confirmation style entry. Price has to come in and we would get short as it comes back out. Now, as it does come back out though, where's my next level of demand? Well, none of these are quality demand levels until down here at 1237. So 1237 ultimately would be my first target on that level, as I'm risking about 4 points to make around 13 in that setup. Okay, looking at bonds and our currency markets. So in the ZN, which is our 10-year note, we did rally up into the area for our 10-year note, and we popped just above it before then coming back down out of it. So this level obviously no longer valid. Now, for those of you that were in the live trading room yesterday morning, we had talked about how, yes, that was still a level, but it was not necessarily a level we were going to short off of. And that's because the trend was so strong and our 4-hour level up here had been hit a number of times. It was really more of an opportunity to get long when price comes back down to our closest demand. Now, this is really our strongest area here of demand, and it's fairly far away, so I'm not sure we're going to make it all that far down. However, I think that there's a chance we could see a bit of a deeper pullback today in the bond markets. So I'm a little bit hesitant to do a whole lot on either one of those markets, the bonds or the equities, just based on most recent price action. In the Aussie, let me remove these. These were actually from a different trade. In the Aussie, we're basing along and just chopping along sideways at the moment. I think that the Aussie has a number of different areas up above us that are quite interesting. I just don't know that we're going to get to one of those today. But if we do, that would be the level that I would identify for the Aussie dollar. We have a little bit of basing, very strong drop. Price has not come back to there since it was created. And it was this area here that was acting as support in the past, right? So, why is that important? Well, it's important because we broke through that old support and that area of supply. New orders are added to the queue all the time, and that may be where some are added in. In the euro, so in the euro, we have this level here that's already been tested once. We're coming close to it again. So this level still stays intact. Nothing else to add on the euro. This is a confirmation style entry because we've already hit it once, right? We've put our hand in the cookie jar once. There's no sense in getting it smacked by putting it in too early again, unless we know that there's cookies in there, right? So confirmation entry means we wait for price to come in and we get short as it comes back out. Canadian dollar. This is our level up here in the Canadian dollar, where we have the origin of this fairly strong move down. Now, that was actually found off of the 4-hour time period, as my friend Sam Evans calls it, the Goliath chart. This is the area off of the 4-hour time. So, lot bigger zone. It may be too wide for you. If that zone's too wide for you, go down and trade that same thing in the currency pairs position. Go use the currency pairs. Nobody said you had to be a futures trader. So, Great British Pound, we are still underneath the level that was really worth anything, and so we're going to leave that Great British Pound trade as is, nothing to add. And then the Japanese yen. So in the yen, we've got a level down here for a potential reversal. These green lines are just targets for that particular trade. I'm going to remove it at the moment. Just so that it's clear to see. This level, I think, is still valid, and I'm going to leave this one in play. However, to get down to that level, we would have, we've got really clean air based on this big parabolic move straight up. There's probably some clean air for price to continue to fall. So if you're short, the yen, I think there's room to stay short and continue to run. If you're not short the yen, I think that if we just get below, call it this area here, there's a potential for a breakdown all the way down into this area. So that's an opportunity in the yen. I did have a request to take a look at a couple of individual securities, and I know I don't normally look at individual securities or any of those in here, and so I do want to spend just a couple of minutes to talk about a few because I think it's good for some people to see. Now, we typically go over swing trades in our Sunday night sessions, our Sunday night live trading rooms, and so one of them that we had talked about and we'd been shorting for quite a while is this Alibaba trade. So this particular level that we have here, where it currently is standing, a lot of times you're going to look at this and say, "Oh, look, it's a nice upward trend." And absolutely, if you are a trend-following trader, you would draw your lines on this, and this would say, "Yep, that's an upward trend." However, when I look at this on a longer period, right, more of a weekly chart, that upward trend has just come into an area of supply. So I'm looking at the bigger picture to tell me, okay, this has come into an area of supply, and we've actually shorted this one probably a couple of times in the last few weeks, but we traded all the way to the top of it. So where does that put us now? Well, we've come back down out of that level on the daily, and so now when I go back down to my daily time period, what I'm looking at here is that we yesterday put in a bit of a hammer candle. Today, if we get lower than this candle's low, this is a good opportunity for a candle-to-candle style. I think that this continues, has some potential for continued weakness based off of the weekly chart. That's really what I would look at on that one. A next one would be Baidu. So Baidu is sitting, it came down and hit our potential breakdown short side yesterday and popped back up. I think that if this one breaks down below 175, that there's continual room for price to fall in that one. And I think there's a lot of room in that. Now, understand that your stop currently would have to be way up here. But if you use the hourly chart as your entry time period, then your stop could be somewhere above this pivot right here if we break down below there today. Now, I'd love to see a little bit of basing before we break down before that level. That's always key when I'm looking for a breakdown, is what's my basing look like in front of that level. Netflix was a position that we just closed out of in our live trading room. We just closed out of the Netflix. It hit target yesterday. So opened up yesterday at target and then popped up. We got short Netflix off this little level right here. It had gapped up, got us into the position, and then moved down and hit our target. Stop. The stop was somewhere just up above that level. Another one that hit its target was also Facebook. As Facebook, we came down in and hit our target one in Facebook now, and that one we had taken our stop and moved it down to lock in a little bit of profit, and then it came back up and hit that stop. So now, why did we pick that area in Facebook? Well, the reason that area in Facebook was selected was because on a daily chart, this is a beautiful little area where sellers exceeded buyers, right? Supply exceeded demand. Strong move down, retest, and then we got a little move out of that particular area before then it shot right back up into that zone. So this one did wind up on that hourly chart, eventually coming back down into that that target zone before then popping back up into our stop loss point. So I'm going to remove, actually, I'll just leave that in at the moment. So now this has pre-market trading on there as well. So let me get rid of pre-market trading so it's a bit easier to see. Oh, no, it doesn't. I thought I had that. I thought I had pre-market trading. Originally, I did have that on there. So next one to look at would be Amazon. Okay, so if I'm looking at Amazon, what we see on Amazon is we have this strong move down, retest, price came back up. We hit it again, and then price dropped out of that level. So the third time that we come into this area, this would be a confirmation style entry, meaning we would get short if price comes into here and goes back out. But think about it logically and leave your comments down below. I'd like to hear what is going to happen if we come up into this region and we base before dropping. Leave the comments down below. What does that mean? What's going to happen if we base in here before dropping? And I want to see kind of what your thoughts are on that, because that's an interesting setup. When I look at this thing on a daily chart, a bigger picture daily chart, interestingly enough, that we've put in lower swing lows here in Amazon, but I don't need to see the indicator to know that my momentum is weakening. My downside momentum is kind of weakening a bit. And how can I see that? Well, take a look at our moving average convergence divergence, MACD, and you see that I've got higher swing lows in the MACD, lower swing lows in price. That is a bullish divergence signal, right? So while I do have on that hourly chart, let me just go back to my plain chart. And while I do have on that hourly chart a potential for a short, it's gonna have to prove it to me, which is why we have a confirmation style entry. And then let's take a look at Apple. So in Apple, I will tell you we just missed our entry in Apple. Price came really close to that Apple level and was unable to jump in there. When I look at Apple off of the daily time period, I was kind of hoping for that gap fill to come into there. We were unable to do so. Yesterday we gapped down again, traded up a bit. I think Apple, Facebook, Netflix, I don't know if you've noticed, all of these things have a strong bearish sentiment. Even though yesterday was a bullish day, they've all got a strong bearish sentiment, and I'm overall pretty bearish on most of these positions. So just keep that in mind kind of moving forward on some of the weaker positions where we have in the past been looking. Another one yesterday that finally met our target was Goldman Sachs. We'd shorted a Goldman Sachs position up in here, taking a look at that, and then moved that stop all the way down. So those of you that stayed in it the whole way, wrote it down from our 225 all the way down to 180. That was a really, really nice swing trade. If you guys, those of you that held on and ran it through the whole way. Now I think we'll get a little bit of a bounce on Goldman Sachs based on where we are, but I don't think it's going to get much above here, and that's where we could see another reversal. So just a couple of equity positions to think about and chew on in your brain. In our Sunday evening session, we actually spend a little bit more time on individual equity positions. For those of you that are interested, go to tradersarmy.com to learn a bit more. Until next time, I will see y'all next week. See ya.